Okay, thank you for joining us. This is an investor conference, so let's get right down to business. Why did you really get fired from the White House?
Well, I mean, it's a combination of different things, but I mean, the main thing was a change in chief of staff, so we have to remember the president had me reporting directly to him, and that was primarily because he wanted to get rid of Priebus and Bannon. But once the new chief of staff came in, it was almost impossible for the new chief of staff to keep me in position because I was reporting outside of the chain of command, and even if I went to be subordinate, I don't think that would have gone over as well. So, I mean, of course, I made a mistake on the phone, which I write about in my book, but that's not really the reason I was fired. I was fired because of the, you just had too many things going on at the same time. But the good news is I got rid of like 4 leakers, which cut the leaking down about 25%. If I had another 5 days, I would have fired another 10 people. I mean, we would have really done a lot more good for the president. But look, it's life, it's politics. So, I mean, the big lesson from the whole thing is don't take yourself that seriously. Number 2, in politics, there's no whining. It's like sports. Politics is like sports. There's no whining. I lost that and dusted myself off and moved on.
So, before you showed up, I was talking a little bit about your books, and in a couple of your books, you constantly come back to resilience and the importance of resilience. So how have you been able to bounce back from this brief foray in politics?
Well, I mean, listen, you have to understand, I have to take you back a little further so you can get it. I grew up in a blue-collar family. My parents didn't go to college. My dad started as an hourly worker. I can remember my mom putting my dad's lunch pail in his, in the refrigerator the night before. He got up at 4 o'clock in the morning to go to work. So there were no country clubs, there were no tennis courts, there were no golf courses when I was growing up in terms of me being able to participate in them. And so you had to make a decision. I had to make a decision. I was either going to take a lot of risk to pursue the American dream on the terms that I was setting, or I wasn't going to make it. And so when you take a lot of exogenous risk in your life, as you guys know in the money management business, you have to be prepared for the setbacks. And so, that wasn't the first time I got fired. It probably won't be the last time I got get fired. I got fired from Goldman, then I got rehired into Goldman. We got crushed in the 1998. There's people old enough in this room to remember the Russian ruble crisis and the sovereign debt default of Russia, which led to the long-term capital management debacle, which led to me almost getting taken out to the cleaners in 1998, which frankly prepared me for 2008. And so what I tell people is if you really are trying to live your dreams, you have to forego the self-consciousness, you have to forego the fear of failure, and you have to forego the social anxiety, because a lot of people don't want to go to a country club or a cocktail party and say that they failed at something. I actually don't care. My attitude is that, if you're going to pursue your dreams, you got to push yourself very hard, and you have to push through that self-consciousness and that social anxiety.
And just coming back to because you're still a very loyal member of the Trump camp, what do you see, what qualities do you see in Donald Trump that his critics miss? And I guess if you think about the Trump legacy, what do you think that will actually be?
So, so I think I have an interesting voice to talk about this because I grew up in a family, where my brother and I are the only 2 people. So my dad's from 7, a family of 7, 7 children, my mom 3. Those 10 people went out and made 40 people, and only 2 of us went to college. So I have cousins that are clamming out on Long Island, they're putting in auto glass, they're making pizza, they're in the auto collision business. None of them are in the hedge fund business, or none of them are in politics. And they all love Donald Trump. And flip side, I went to Harvard, worked at Goldman Sachs, built 2 reasonably to very successful hedge fund businesses. The people that I talk to in New York or on the coast, they don't really like Donald Trump. And so you have to ask yourself, like, so I can look at it from two different angles, and I can explain to you why the people I grew up with like Donald Trump, and I can explain to you why the people that, I manage money for dislike him. But what people really should understand about the situation, whether they like it or not, and I can't speak about Canada in terms of the economic situation here as well as I can about the United States, but there is an economic and social divide now in the United States that's widening. And one of the things I write about in my book is the observation of spending 30 years trying to seek my own financial independence. I started to, I would call it these smaller concentric circles of confirmation bias. And so what ends up happening is you're hanging out with very wealthy people, they see the world a certain way, and you're hanging out with them and you're going to their country clubs and you're spending time with them and you start seeing the world the same way that they're seeing it. And what I write about in my book is that there were probably 17 presidential candidates that saw it the way I saw it. There were only two that saw it the way it really is, and that was Donald Trump and Bernie Sanders. And so what I write about in my book is that when I went on the campaign trail with President Trump, I did 26 Donald J. Trump rallies and 2 Bernie Sanders rallies. And in that experience, it was like a major epiphany for me because I got to see what I would describe as my upbringing. I was in an aspirational working class family where my dad was like, okay, go to school. He was a pretty rough guy, but, go to school, be on time, and you can seek the American dream and you'll achieve it. That family that I grew up in was an aspirational working class family. The families I saw on the campaign trail were desperational working class families. They were, hung up about their job. They may have lost their job. They were in a displacement position. And so what I tell people that I'm living with today, and I said, you should really understand what's going on in the society. There is a reason why 62.8 million people voted for Donald Trump. You may not like him, but you should really address what's going on in the society. I was on Bill Maher's show on Friday night. I was trying to explain it. He was like cutting me off, and then he said to me at the end, he's like, look, man, I didn't want you to be that right on my own show. I said, okay, fine. But it's not that I'm trying to be right. I'm just trying to tell you what's going on. I mean, if you're a Democrat in the United States and you don't see that President Trump hijacked a very large piece of your base, and now you've made a decision that you're going to call those people deplorable, racist, ethnocentric, white nationalists, if you're going to do that rather than say, hey, wait a minute, I got to change my product, I've got to change my merchandise that I'm selling. Franklin Roosevelt, Robert and John Kennedy, Lyndon Johnson, these people were galvanized and hubbed around the blue-collar people. But the current Democratic Party in the United States, I don't know what they're doing. I mean, they've missed their product design in my mind, and so they've got to go back to the drawing board. And if they want to make it a fair fight with the president, they got to go back to the drawing board and address that. But for me, I'm a loyal supporter because I'm close enough to the situation to see through the demonization. I'm close enough to the situation to see that there is a lot of things that are going on in terms of the delayering of regulation and the economic policies that will lead to economic growth. And I'm not saying this as a Trump supporter, I'm just being observant as an economist. Lower middle class wages are up about 5.5% over the last year. That's the Wall Street Journal giving you that number. But here's one other thing I'll say before you ask me another question. Like the word sycophancy, like if you're working at SkyBridge and you walk into my office and you tell me I'm tall and I'm right, now I know I have a problem. If you tell me I'm short and I'm wrong, then I'm like, okay, now I can build a relationship. And so for me, the word sycophancy is like really close to selfishness and self-survival. But the word honesty is close to the word loyalty. Like I would rather have somebody in my office telling me the truth. When I worked at Lehman Brothers, it was a very short period of time, but Dick Fuld was surrounded by people that were courtiers. They were just telling him what he wanted to hear or what they thought he was going to be okay with, and they rode that thing right off the cliff. And so for me, I think I can be objective, and I can tell you what I disagree with as it relates to the president, but still have a relation with him. I mean, like, he called me, the guy's watching Bill Maher right now. He's not watching it because of me. He was watching it because of Stormy Daniels, right? I mean, everybody in this room knows that, right? So he's watching. He calls me the next morning to give me like a media critique, and we had a good laugh because what he basically said to me, which I'll share with everybody, is, so how come people haven't really been able to figure this out? And the reason they haven't been able to figure it out is that he takes these like Molotov cocktails and he throws them, and they're all diversionary tactics. So, CNN's reported that he's lied like 6,000 times. Okay, maybe I'm wrong. Maybe he's lied like 8,000 times. I don't know what the number is. Okay. And then he'll say another thing. He'll throw another diversionary bomb over there, and everybody's running in that direction. And so, like, the best thing that the president has going for him, frankly, are the Democrats, because they're disparate, they're fractious, they disagree on like a coordinated strategy and a coordinated policy, and he's doing that to him. He's doing a number on him, and so I'm watching him do it. It's like, it's hard to believe that they're falling for everything that he's doing. That's right. Just my honest opinion, but that's fine.
So, just before we get to the more substantive content, and just to satisfy the audience's craving for some presidential gossip on the campaign trail, and don't pretend like you don't want to hear it,
it takes an hour and 10 minutes to do the hair, at least an hour and 10 minutes. I mean, it's like unbelievable how the whole thing, I mean, like, if the wind blows, he looks like Darth Vader after the helmet comes off, you know what I'm talking about? And it's like, I mean, he'd be really mad if he heard me say that, so I'm sure that'll get reported by somebody, but go ahead. I have said that to him, and he gets mad. It makes it very sourpuss, but go ahead, I'm sorry.
That's fine. So let's get to the more meat and potatoes. So what have you learned from your White House experience that would make you a better investor today?
A better investor. So, like, listen, every time in my life where I have put my ego and my pride into something, I have made really bad mistakes and really bad decisions, whether it's personal, professional, or investing. And so what happened to me was I accidentally became candidate Trump's media surrogate, or one of his media surrogates. So traditionally, I was running my business and I was writing donor checks to the Republican Party, typical business executive that had an interest in politics. And then, I just set the scene for it. I was with Governor Walker, the governor of Wisconsin, and then I was with Jeb Bush. And I had a meeting with then Donald Trump in his office the day after the Apprentice finale. So I'll set the scene for you guys. He calls me a week before. He said, I want to have breakfast with you. I said, fine. We have a 20-year relationship. I go have breakfast with him. He's like, did you see me on The Apprentice last night? I was great. Wasn't I great? I'm like, no, I didn't see you on The Apprentice last night. I'm not watching The Apprentice. So you were the only one not watching The Apprentice, right? So he said, tell me how great he was. And then he's like, okay, but that's it. I'm done. I'm running for president. And I said, you're not running for president. I said, I mean, I know you. You're just not running for president. And he's like, no, you don't understand. I'm totally running for president. And I'm like, okay, listen. I said, you're not going to run for president. I said, not only that, I said, I wasn't watching The Apprentice, but I was watching Fox News last night, and you're at 2% in the polls. He says, oh, that's because those people are like you. We go, the minute I declare myself running, I'm going to shoot right to the top of the polls, and I'm going to stay there until I win the presidency, which more or less happened on the Republican side. And so I said, well, look, I'm already tied into Scott Walker. And then if Scott Walker comes out of the race, I've got to go with Jeb Bush because my clients are with him. And then Mr. Trump looks at me and says, okay, after I kill Scott Walker and I kill Jeb Bush, will you come work with me? I said, okay, yeah, no problem. I'll 100% do that, right? I said, but you're not going to do this. I said, because the White House living residence, I don't know if you guys have been in the White House, but the upstairs is like 5,000 square feet. He has like a 19,000 square foot apartment. I'm like, you're not going to downsize into the White House. Like, I know your personality, right? She's not going to do it, right? And then I'm like, you're going to have to carry the press around in your plane. I've been on your plane. Your plane's great. And he's like, oh, no, I'm definitely running. So now Bush loses. I get a call from his assistant, go and see him, shake hands, and now I'm in the fundraising mode. And the reason I'm bringing all this up to you is I want you to know how much work was done. So I worked for him for almost a full year. They needed media advocacy. I was in there as a media advocate. There's a guy, chairman of the Republican Party. I mean, I have nicknames for these people, but they're not appropriate for the stage, so but whatever. This guy, Reince Priebus, is telling Trump to leave the race after the Access Hollywood tape. So there was definitely a rift there between like the RNC and the Trump loyalists, right? So the president is naming me his chief networking officer. I'm going to be his OPL director. And I'm like, okay, no problem. So I'm getting my business ready to set up to sell the business. But I don't realize the Washington shenanigans, like the Washington two-step, and now they're starting their opposition research on me, and then they're leaking on me, and it's this guy Priebus. It's like, this guy's like a total joke, right? So I mean, he couldn't carry anybody's jock or bra in this room. I mean, the guy really is a joke. So now I'm like realizing what a joke the guy is, and so he's making up a story about me to block me from that job. And then I put my pride and my ego into the situation. And you want to talk about investing? Never do that. You want to talk about your personal life? Never do that, and certainly not in politics. And so now I got my pride and ego in it, so I'm definitely getting my way into the White House somehow. And then, of course, I figure out a way to get into the White House, and I probably shouldn't have started my first day in the White House with like a chainsaw and a hockey mask from Jason in Friday the 13th, right? Once I had the chainsaw in my hand, I was going after those two guys because they were going after me. And so I handled the thing the way a business person or an entrepreneur would handle it, and not a political operative, and that was among many mistakes that I made. And so you're an investor in this room. You know when your ego's getting involved. You know when you're long something and it's not working out, but you think you're right and the market's wrong. Well, guess what? The market is probably right, because there's 100 million smart people in the market that are making calculated decisions alongside of you. So take your ego out of it. I mean, it's a long-winded way to bring it up, but I just wanted to give you the background so you could see, you know, where the fight started, how the fight started, and where we all ended up, which was on Pennsylvania Avenue.
So let's flesh that out. Thank you. I mean, let's flesh that out a little bit more. Given your fascination and passion for politics, how does it actually inform, or does it actually inform your specific investment views?
Well, I mean, look, unfortunately, when we were growing up, you know, we were taught Fed neutrality. We were taught things like purchasing power parity. There's people old enough in this room to remember where there was like a light touch by Treasury or the Bank of England or the Bank of Japan to like keep an equipoise in the currency markets and all that other stuff. And all of that stuff has gone by the wayside now. So you really do have to have an understanding of what's going on in politics, whether you're operating in European stocks, stocks in the United Kingdom, or the U.S., you really have to have an understanding of what's going on. You have to have an understanding of the directive that's coming from the executive branch, at least in the United States, as it relates to the Fed. Now, people say that the Fed is independent, and I'm not here to challenge the academic status of the Fed being independent, but I will point out to everybody in this room that in February of 1993, Alan Greenspan showed up in the visitor's box at the first State of the Union address by Bill Clinton, and he was sitting next to First Lady Hillary Clinton. And why was that? Because he was accused of hurting the Bush family with 4 rate hikes going into the 1992 election. And if you're really a Fed watcher at that time, you knew that he wanted to get reappointed. And so he was sending a signal to the executive branch that, yes, he's independent, but he's probably more tied to them than the market would like him to be. If you think Dr. Bernanke wasn't tied to the executive branch of the United States after the crisis started, read his memoir, The Courage to Act. It's a phenomenal memoir, by the way, because it's really good dissertation on the Fed and macroeconomic policy. And the point being is that you really have to understand what's going on. Like, you know, rates are going up in the United States. They will stop going up when you really see significant economic slowdown in the interest rate sectors of the economy, which, by the way, is already starting to happen. And you can see it's one of the reasons why the market's so volatile. And once that starts to happen, the Fed will start changing its tune, and it'll start talking about data dependence. And then you'll know, once the Fed says that they're going to move to a more data dependent stance than they are right now, then you'll realize that that'll be a good sign for a bounce in the stock market. But I'll just make one last point about this, because you have to look at these things. If you take a 12-month rolling average of GDP in the United States over the last 105 years since the introduction of the Fed, and you look at where the Fed overnight rates are, a very good rule of thumb is that the overnight rates should match the 12-month sliced rolling average. And you mentioned the SALT conference. Dr. Bernanke joined me in Las Vegas one year, but also in Tokyo, and we did it there. We had a very, very long conversation about the quantitative mechanics and econometrics involved with setting these rates. And so right now, the overnight rate is 2.25. That 12-month rolling slice that I'm describing to you is probably about 3.1%. So at a bare minimum, the Fed's got to move 3 times to stabilize that currency. And so as much as the president doesn't want that to happen, and people that are in love with their ETFs do not want that to happen, a responsible Fed chair has to move that rate at least 3 times. And so you have to prepare your portfolio for that. And you got to be recognizing that your investment decisions are also being flavored, and you have to factor in what the government is doing at the same time.
So let's segue from that to, where are you seeing the opportunities and risks today? How are you investing your own money? And how would you suggest that family office be thinking about positioning their asset allocation?
So I always start out that sort of a question with I'm in Wayzata, Minnesota, which is like cold until you get to Canada, right? So I'm like in Wayzata, and I'm at this country club speaking, and there's this old woman in the back. She's like raising her hand, and she read my resume. I had started as a financial advisor at Goldman, and she says, "So you work with wealthy people and family offices your whole life?" And I'm like, "Yes." She says, "Okay, so what advice do you have for us? Forget about the fact that you're running SkyBridge Capital. Put your FA hat on, or your financial advisor hat. What advice do you have?" And I said, "Listen, doing this for 30 years, I have my advice down to 2 words, and this would be applicable to everybody in this room. And the 2 words are, if you're wealthy, stay wealthy. And if you get it down to those 2 words, you can build your asset allocation portfolio off of those 2 words. If you're going to chase unicorns, if you need to be the person on the golf course, or at a cocktail party bragging about the Uber investment you made when they had a $25 million valuation, you're going to miss so much about what's necessary for your investment portfolio." So for me, we're in a rising rate environment. There's no question about that. And that will create more stock market uncertainty. And if you're in a static bond portfolio, you got to be worried. I'll take you back to July of 2016. The 10-year bond in the U.S. was 1.36. I didn't look at it this morning, but it's probably, 310, 320. It's had a dramatic move over the last 25, 26 months. In that period of time, the Bloomberg Barclays Aggregate Bond Index is off about 2.5. And so if you're in a static bond portfolio, you are running huge risk now that you're going to get hit on a principal basis. And so for us, you asked me how I'm investing our own money, we have about 45% of our portfolio in adjustable rate securities. And so when rates are going up, we're clicking off more cash flow and more positive forward carry in the portfolio. We're way off the mark on stocks right now. I'm very worried about the ETF space, and I'm old enough now to know that anything that you think will not happen in the markets happens in the markets. And I'm old enough now to know that the 10,000-year flood, that all these guys with their propellers on the top of their heads, all these statisticians, that's a 9th Sigma 10,000-year flood. Well, that happens every 5 years on Wall Street. Okay, so I'm old enough to know those things. And so what I'm super worried about with the ETFs is there's a ton of them. There's probably more of them than there are stocks, like there used to be with mutual funds. And the way that they're bundled, if you have a explosion in the market or you have some kind of race to the exit door, you could have happen to those ETFs what happened in August of 2015. And people in this room will remember that for about 6 hours, the ETF baskets were uncoupled from the actual price of the ETF, and you were watching stocks like Facebook drop 25, 30% in 2.5 hours of trading. And so when you sit here and you're long a ton of ETFs, and that's been a phenomenal bet in a zero interest rate policy environment post-2008 crisis, but we're not in that environment anymore. And if you're sitting there with this expectation that everything's going to be fine and dandy as the rates are rising and political risks are out there and national security risks are out there, I would just be very, very cautious. So for me, and by the way, it's not me. I'm not the only person that thinks this. We have about $500-600 million with Dan Loeb, who's one of my best friends at Third Point. And he just hired 2 quant guys to really focus and analyze the liquidity profile on some of the largest ETFs. And I'll just make one last point. If you're in the high yield ETF or you're in a liquid bond ETF, they don't trade back to par. Okay, it's not like I'm long a U.S. Treasury, rates are backing up, but in 2 years I'm going to get it back to par, or 5 years. In an ETF, they don't trade back to par because it's a liquid basket of securities. So I would just be very cautious in this business environment right now.
So,
not to sound like Debbie the Downer. I like a lot of things too, but those are the things I'm worried about.
So when you started your first hedge fund, Oscar Capital, so you started it in a much more inefficient environment. So if you fast forward to today, first of all, would you have started your hedge fund today? And second of all, where do you think are the opportunities to catch inefficiencies in the market today?
So, the first question is I'm reminded of what Fred W. Smith said about starting FedEx. Every entrepreneur goes through the same thing. You have this blinding passion, you have this huge dream, and so you're going to do it anyway. And then your business plan meets contact with the enemy, and now you have to change your plan. And then you're sitting there 6 months, 12 months later, like, my God, I'm like an idiot. I could have stayed at Goldman Sachs and made really good money and not taken on all this exogenous risk. But so the answer is I would certainly have done it anyway, because that was one of my passions in life. I wanted to have my own business. But what I'm worried about today is that the regulation in our industry is so high that if you wanted to start Oscar Capital or SkyBridge in 2019, let's say I was going to leave and start SkyBridge Capital January 1st, 2019, I'd have a very hard time doing it, because the first 10 or so employees would have to be lawyers and compliance people. When I started those businesses, you could start them with 2 or 3 people in a room, which I did, and then you could grow the business out, and you'd have a couple of family offices maybe that believed in your investment philosophy, and so they attach themselves to you, and then you've got some revenues, then you can start building your footprint. You really can't do that today. And so the great irony about the regulation, guys like me should actually be for the regulation, because what the regulation does in a business like ours, we're large enough now with $10 to $11 billion under management, is it creates this moat around the business. But if you're an entrepreneur or you believe in a free market-based incentivized system, you got to scale back this regulation. A lot of it is unnecessary. But as it relates to market inefficiencies, there are less market inefficiencies, but I'll tell you what I think that there are more opportunities for, and there are more opportunities, in my opinion, to move the capital efficiently. Like one of the things that we've done at SkyBridge, which people don't fully understand until they really start investing with us, we're really not a fund of funds. I know that we're a quote-unquote fund of funds, but we really view ourselves as like an outsourced multi-strat. And so my attitude, or my team's attitude, is we'll make an investment decision and then we'll put the capital out into the best people that we can find, as opposed to build all that internal infrastructure. And if you look at our pricing and the discounts that we can get, we're actually priced below a lot of the multi-strats like Millennium or Citadel. And our performance, you could look at it, I'm probably not allowed to talk about it up here, but the performance is quite good. And so The reason I'm bringing this up is that you can move money due to the advances in technology and due to the advances in the way things are set up. You can be so much more dynamic in your portfolio allocation. So when when I got back from blowing up at the White House, we're sitting in a room, and one of the things that we did when I was at the White House is we were talking about who the next Fed chair was going to be. And by the way, this was like on a Wednesday. I know it was a Wednesday because I was only there for one Wednesday, so I know it was a Wednesday, right? So we're sitting there in the Oval Office, and we're talking about the Fed chair, right? And when I got back to the firm, I said, the rates are going up because the president back then, he's saying something different now that has more to do with the trade situation, but back then he was reminding me and people in the room about the need for rate normalization because his base is really not the people that own assets. His base are people, I'll give you the profile of his base. They make about $50,000 a year. They're probably renting, so they're not getting the benefit of the interest rate deduction off of their mortgage or the, sloping downward of the interest rates. And they were on the campaign trail complaining about their $10,000 CD. Why is the 18-month CD that I have at my community bank, why is it at 1% when it used to be at 5%? And it's, of course, President Trump being President Trump, he's like, don't worry, I'm going to fix that. I'm going to go in there and fix it, Because he realized you can't really fix everything. But he was sitting there in the Oval Office on that day talking about how he didn't want to go back on the campaign trail without normalizing interest rates. And so he was going to pick a more hawkish Fed person. So to me, the technology that we have today to move a portfolio into position, given where the macro, political, economic environment is, has never been better. Maybe there's less inefficiencies between getting long this stock and short that stock, and Reg FD has certainly changed that market, but there's still a ton of things to do from a portfolio perspective.
So let's come back to something you referred to, hedge funds. I mean, you've built one of the largest funds or outsourced multi-strat, however you want to refer to it, in the world. You've wrote the book on hedge funds. So where do you see the role of hedge funds today, and how would you respond to criticisms that talk about the muted performance, high fees, complex structures, et cetera? I mean, Rob Capito was up here right just before you. I mean, he sort of went through some of that. How would you respond to that?
Well, look, I think Rob is probably mostly right. I think that these products are for 5 to 15 cents on a dollar. I think that the 85 cents on the dollar should go into the structures and products that BlackRock is delivering. But here's what I would say. A rational person will do something irrationally in the marketplace to protect themselves rationally. So now I know I sound like Yogi Berra, so let me explain that, okay? So I am a CIO, and I've seen this happen, so I'll give it to you direct. Troy Gajewski and I are in a meeting with a institutional CIO for fixed income, and we're showing him in December of 2008 where the subprime market is and where these bonds are trading. A lot of these bonds are trading 35, 40. They'll never get back to 100, but you could build a case that they could get to 70. And he looks at us and says, yeah, that's great, but I'm in the process of selling my subprime portfolio. And I'm looking at him saying, well, why are you doing that? And he says, well, I've got to window dress this portfolio because I've got to have a meeting in February, and I've got less sophisticated board members that are going to sit there, and they've only heard from the American media that subprime is the most toxic thing in the civilization. And I'm going to snapshot this portfolio on December 31st without any subprime. And so even though it's trading at 40 and will likely trade to 70, the people I'm talking to, they think bonds are supposed to trade back to 100. They're supposed to trade back to par. And so Troy and I walked out of that meeting, and I said, you see that? That is a rational person that will do something irrational in the marketplace to protect their job, to do, protect themselves, to do something rationally. And I said to Troy, that's why there will always be opportunity in the hedge fund space, because of the versatility of our portfolio, the mandate, the way that limited partnership agreement is structured. We will be able to take advantage of those anomalies if we're trained for them and we're prepared for them. My point is, in a world like this, where the volatility is going up and the ending of the zero interest rate policy will have an impact on ETFs and static portfolios, excuse me, having a hedge fund in your portfolio, or a multi-strat or a fund of funds, I think is a very defensive, very smart thing to do.
And I guess you're partly in the business of picking managers, and you're certainly in the business of hiring leaders all the time. What are you looking for? I asked Rob the same question. What qualities, characteristics, and traits uniquely that you're looking for in your managers and your leaders?
So, I mean, the number one thing is the passion. Like, one of my portfolio managers, we had some rough performance in 2015, and one of my portfolio managers was blaming it on egocentrism of some of the people that we were giving our money to. And he was proposing that we have a no billionaire rule for our investing, meaning that, like, once the guy gets to be a billionaire, they start focusing on other things, and they're moving away from their core strategy. And I was like, well, I don't necessarily agree with that, because there's a lot of billionaires I know where their passion in their life, their vacation, is actually going to work. I love to work, frankly. So, to me, no matter how much money I'm making, I'm still going to be there working and in the cockpit. So my thing is, you got to be with people that are absolutely immersed and totally focused on their jobs. And so for me, I'm like the public face of SkyBridge. I'm also the guy that can evaluate talent. I mean, if you read my book, I give a very accurate description of the different people. And, by the way, you may not agree with me, but you trust me. What I said about Steve Bannon, less the expletive, is exactly what President Trump said about Steve Bannon in January of this past year. And I'm pretty good at reading people, and I know how to put a team together, but I'm not running the money. But my job was to get the profile of that firm up, and to the people that I selected to run the money that have done an exemplary job, to raise their profile so that they could end up raising more money. And we bought that business from Citibank. It had $1 billion under management. It's got like 10.8 billion today. And so you have to know your role. You have to be with people that know their lane, know their circle of competence, never give up, but also can do what I said earlier, which unfortunately for me, I've made that mistake. I'm not saying some of the managers that we haven't made that mistake, but once you put your ego into something, you start to lose your rational voice of how to handle yourself. And so that's the combination. And then I guess the last piece is the X factor. It's like, when I got blown out of the White House, a lot of my detractors felt like, okay, we're going to build this guy a little house of shame, and we're going to give him a dunce cap, and we're going to sit him in the corner, and he's going to go away. And that'll be great. I don't know, did that happen? I don't remember. I don't think that really happened, okay? And so, the point I'm making is that, you can never be with somebody that's willing to give up under any circumstances, no matter what. You've got to always be ready to be dusting yourself off. I mean, I could probably, if the guy that plays Mayhem on these Allstate commercials goes away, I could probably replace the guy, right? I'm probably a total candidate for that. But I like people like that. You can tell right away when you're in the presence of somebody that's like, hey man, I'm not giving up. Okay, here's my agenda. Here's what I'm going to do. And I may make some mistakes, but I'm pushing the envelope. And I guess, everybody in this room probably has kids. A lot of people have children in this room. I have 5 of them. You don't want your kids to see you give up. And you don't want your kids to get complacent, no matter how rich you get or how much art you have on the wall or fancy stuff that you're showing off to your friends. You don't want to get complacent. So you don't want to be with people like that either.
Yeah. So we have time for just one quick question. You could talk a little bit about the role that values and culture have in your organization. Mm-hmm.
Well, look, at the end of the day, there's 3 or 4 things that I think are super important. One of them is from legendary Goldman Sachs chairman named John Weinberg. He said, some people grow and other people swell. And boy, is that such a true statement, right? And so I always look to people for their growth as opposed to their swelling. Second thing is that you have to be in a team. If you're trying to do everything yourself, or your managers are trying to do everything yourself, that's a disaster. So you have to like decentralize, and you have to use the right pronouns in your culture. Like if you're talking me, and I, it's going to be very, very bad for your business. So it has to be an our and a we, and you have to figure out a way to make the team work in a symphony. And then like the third thing, which I think is the most important thing, is that I want people to make mistakes in my firm. I don't want them to be afraid of making mistakes. And so my thing is, if someone's making a mistake and they're got their heart and soul into the thing, then my thing is like, okay, I'm there to back that person up. And so I think if you do those things, a lot of good will happen. Not saying you'll get everything right, and not saying there won't be cyclical setbacks in your life, but you know what? If you can get that esprit de corps right, you can take a very small group of people and do a lot of really special and, high magnitude sort of things.
Anthony, can't thank you enough
Hey,
for
it's a
joining
pleasure to
us.
be here.
Thank you.
Thank you
Very much.
Thank you, guys. Thank you.